leaderships throughout the 6 countries, where you find the leadership is heading to the innovations, the technologies, the investments, the value creation, and the addition to the economy of the state. And this is always reflected in the visions that we are all aware of in all of the respective countries in the GCC. So just laying this down, so we are aware that we are trying to focus on what we have seen in the last year and then what we predict in the coming year, giving also the other legal and tax and regulatory challenges that are in front of us. And if we focus on the GCC, we can see the main investment timeline as we start from the 1970s with the oil boom. Where like Middle Eastern countries started investing heavily in Western assets due to the increase of the oil revenues. That was the first expansion from the GCC countries to the Western world, including the US. And then, as of the 2000 and like the years that follows that, we have seen the rise of all the amazing sovereign wealth funds in the 6 countries without any exception. And as you know, maybe like now the collective value of the sovereign wealth fund of the Middle East are comfortably above $2 trillion plus or minus. We can see that the 4 main areas of investments coming from the Middle East are focusing on real estate, where we see attention to the luxury real estate in cities like New York, Miami, LA, London, of course. And as you know, you go through London, New York, Singapore, and you can identify all the trophy assets that are owned by the investors from the Middle East. And the other sector of trend of investment that we have seen is the technology sector, where we have seen notable attention from the sovereigns and from the families to invest in several companies, either in the Silicon Valley or outside the Silicon Valley, in technology, and examples are unlimited. We're trying not to mention specific examples because, as you know, many of our connections and clients are respecting very much their confidentiality. But of course, you know exactly most of the examples that are covered and in the public domain now. Maybe the third bucket of that we see Middle Eastern investors focusing on are in infrastructure projects, and we have seen this happening in airports, in grids, in utilities, in different parts of the world, specifically the US. And last but not least, and this is a logical thing, is the energy. As you know, many of the countries in the GCC are heavy in their exposure in the fossil fuel investments, and therefore they are keen to diversify their economy, investing in renewable energy and other sources of sustainability in relation to energy. Who are the main players that we see from the Middle East? Of course, like number one and above all are all the sovereigns from the 6 countries. You know them, like ADIA, QIA, PIF, KIA, Mubadala, EIA, Oman Investment Authority, and the list is very, very well recognized. And then the second major players are the family offices. We see a lot of private investments and family offices of high net worth individuals from the Gulf increasingly investing in US real estate, startups, and other areas. And the other, maybe third player from the Middle East is usually from the investment banks, either conventional investment banks or Islamic investment banks. There are certain pillars of the legal framework that is governing the foreign investments in the US. And like Liz was just mentioning, the fact that we were together attending a large event with the FII, one of the think tanks owned by the Public Investment Fund of the Kingdom of Saudi Arabia. Keynote speaker was President Trump. Maybe this is a very good timing to update you on the key messages that the president mentioned in front of that is focusing on the investments from the Middle East. And the president mentioned multiple times that his administration will be very keen to facilitate the investment environment in a manner that allows investors from all the friendly partners and countries to come and invest in the US better than any other time. And this was, as you know, maybe immediately after that, he issued the first US investment policy document, which included specific mention of the sovereign funds and how the administration will be focusing on attracting them being from friendly countries to invest in the US. So although there are like some relevant laws and regulations, with this kind of very clear direction of the current administration that we have listened to and seen in the document that was issued a few days ago, we can assume that US will have a very robust legal framework to govern and encourage foreign investments coming from countries like the GCC because they are on the friendly side of the US. And the major maybe legal hurdle that you are aware of is the CFIUS, the Committee on Foreign Investments in the US, where it plays a critical role in reviewing foreign investments that may affect national security and so on. But even with that, the current developments of the Trump administration is really looking at facilitating this process big time. And there are many other relevant laws, including the Foreign Investment Risk Review Moderation Act, which expands the CFIUS jurisdiction, and so on. And then you have like the other relevant reviews from other administration departments that is, as I'm telling you, expected to be easing as we go. Like we have mentioned now the trends in the regulatory framework, and it goes without saying that all our investors and all our clients are very keen to comply strictly with the US laws, being in relation to the anti-corruption, being in relation to the Security Act, being in relation to the CFIUS, as we have mentioned. And they are very keen to go through thorough due diligence, engaging legal expertise, and implementing serious compliance programs. There are some elements also that usually are considered when we help our clients from the Middle East into the US, which are mainly the bilateral investment treaties and, of course, the double taxation treaties that are in place because they give the proper analysis of these two sets of treaties helps in relation to enjoying the protections that are granted to the investors and at the same time a better tax treatment as the DTA is granting them. Like I want to start concluding to be able to hand over to Kate. But as we have said, we have seen emerging trends now in investment with a focus on technology, focus on sustainability investments, real estate and hospitality, and of course, and this is a trend now, like as you have seen now in every keynote from any speaker in a political or economical forum, AI stands as a main theme of every sentence and dialogue, and therefore AI and technology is going to be a large part of the future investments from the Middle East into the US. Of course, there are few challenges that are facing usually the investors. We spoke about the legal barriers. the cultural differences, which need some help in navigating the best business practices and negotiation styles for the foreign investors, and observing, of course, all the related market volatility matters, including economic fluctuation, geopolitical tension, and global event, which can impact the investment stability and return. Maybe I'll stop here and I'll just highlight that the future is very bright in relation to the GCC investments in the US, given the surpluses of the GCC, the ambitious of the GCC leadership and sovereigns and family offices and investment banks to explore amazing opportunities in the US marketing, focusing on the new trends of technology and AI. And in the same time, like we cannot deny that the American market in any reasonable and fair assessment is still the most attractive market with the returns that we see, and of course the entire proper environment that we have seen the administration in the higher level of its representation is confirming its commitment to facilitate the environment more and more and allow foreign investments to flow to the country, especially from friendly countries like the GCC. I'll stop here, pass it to Kate, and I'll be looking forward for all your questions and the clarifications. Thank you very much.
Hi, everybody. I'm Kate McCullough. As Ehab said, I'm a partner here in the funds group at DLA. And just wanted to talk a little bit about what we're seeing in the fund space in terms of what kind of structures, what kind of investment focus is really attractive to investors that are, based in the Middle East, looking to invest in the US. And, oddly, the first funds trend is kind of, in a way, anti-funds. We're seeing a lot more interest in more customized structures. This really started years ago with co-investment opportunities. We started seeing a lot of investors making just little toehold investments in pooled funds, really so that they could get access to the co-investment opportunities, which were often bigger, usually without fee and without carried interest. And so it was really, a way for investors to kind of get insight into investments that really appealed to them and to their strategies. That's now evolved, and we're starting to see more what we call funds of one, or what some people call SMAs. And these are really just fund structures set up for a single investor with a specific investment purpose. So it might be the case that it invests alongside a pooled vehicle, maybe with respect to some investments only, where that investor has a particular interest, maybe pursuant to some pre-agreed allocation structure where they share in all investments. What's the advantage of vehicles like this for investors is they get much closer relationships with the manager. They get much better access to information. They often have a lower fee and a lower carried interest, if any at all. Expenses are often capped, so they can be cheaper to go into. And often we see investors have the ability to approve which investments they take, which allows a degree of customization that you just can't get in a blind pool structure. We're also seeing these types of deals become very attractive for new managers. So as investors are looking around and seeing what's out there beyond the sort of big managers that everybody knows about, setting up a fund of one potentially becomes a great way to test out a new manager that the investor has run into from time to time in a way that gives them a bit more control over the business. The other thing that we're seeing is I say GP stakes deals, but I encompass a whole lot in GP stakes deals. So it might present as an investment in the ever-growing market of funds that just buy out different GPs and then make money off of the fee and carry stream that come from those internal GP houses. It might also be part of a strategy of seeding new manager. It may be that, the investment is made directly in a manager GP alongside a fund of one to get a manager started. It may come very often with a revenue share so that the investor actually gets a share of the fee and carry that the manager is earning. We see these deals a lot with newer managers that are setting up in the market that have connections in the region and that are looking for anchor investors to establish themselves. But to be honest, this trend really isn't limited to new managers. We're even seeing this become part of a process with experienced managers where they're offering better fee, better carry terms, or a share of GP stakes in exchange for a commitment to invest across a multiple series of funds of a specific type. So I think I would say the sort of overarching theme I'm seeing in funds these days is a desire as investors are becoming more sophisticated, as they're doing more of their own direct deals, as they're really focusing their investment strategy, as they're looking to managers beyond the ones that have been in the market for years. I'm seeing this real push towards these more customized structures. And, I have to say, as a person who's been doing funds for 15 years, it's been very interesting to see how that's evolved. I think if you're looking at it from a market, from an investment sector perspective, one of the big areas of growth, I think any funds person will tell you, is VC. So we're seeing so much interest in VC funds right now. And I think a lot of that is driven because the Middle East is becoming such a technology hub that is obviously an area of focus for so many VC funds. It becomes a great sort of entrance into the VC world. It's a good way to get introduced to startup businesses. And so what we're seeing from investors is even when they're looking at something like a standard PE fund or a standard real estate fund, they're looking for links to the technology sector. And I think this really dovetails with what Ehab was saying about how there's an enormous interest in investing in technology. And when you're a funds lawyer, where you see that come out is VC. I think the other area that Ehab mentioned, renewable energy and sustainability. And this one is kind of an interesting one for me because I think of it really in two separate sides of this coin. So on the one side, there's an overall interest in diversification. And as Ehab mentioned, a lot of this is being driven by sovereign wealth funds as part of a national strategy to diversify away from fossil fuels and into the renewable energy sector. So we are seeing a little bit in the fund space some interest in investing in energy funds. But I think the other side of this that we see in the fund space that's not just limited to, am I investing in an energy fund, a renewable energy fund or not, is really a broader concept of ESG. And, I started my career working with a lot of development finance institutions. So I've been dealing in ESG since I started. And I still remember getting a call in, I think, 2011 from one of my partners in New York saying, one of my funds wants ESG. Tell me what ESG is. And it's now since exploded into this whole sector on its own. And so I think that the other way that ESG comes into this when you're doing fund investments is from a reputational perspective. If you're investing in a fund where there's no control over what that fund is investing in, and this is, again, particularly true for sovereign wealth funds, but it's not limited to sovereign wealth funds. It's really for any investor that has a strategy, for any investor that has an overarching concern. Where am I comfortable with my money going? And so what we're starting to see is some of these investors, moving in the direction of some of the European investors and the American investors. Oops, sorry. That have been in this space and really starting to develop their own internal ESG programs that they can start to, impose on their fund managers for, even if a fund is not renewable energy, what is this fund not going to invest in? What am I concerned about from a reputational perspective that we need to stay away from? I think the last trend I'll talk about in funds is Africa. We are starting to see more interest from investors in going into Africa. And in the fund space, this is often taking the form less of a traditional pooled vehicle structure where you just hand over your money to be invested wherever, and goes back to really more of those customized structures that I was talking about before. We're seeing it more often with funds of one, where investors can have some control over investment selection, but they can rely on someone else to do the investment sourcing. Or it might be a single asset fund where investors are, sort of predetermining what asset a particular fund is going to invest in, but then they've got a third-party manager managing it for them. It's a tough fundraising environment in Africa. I've been fundraising there for years. I'm not going to lie. It's a tough market to fundraise in, but we actually really are starting to see some interest from Middle Eastern investors in expanding outside of the traditional, US European market. So on the fund side, I think that's really what we're seeing these days, and very happy to take any questions that any of you might have.
We have a question from Kamal. Please feel free to share it with us.
Hello.
Yes.
Yes, of course. Hi, Ms. McCullough. Thank you so much for sharing all of this amazing experience with us. I know investment fields has been really critical and challenging, especially with the new US administration, and we've been seeing a lot of tariffs, and I don't really see any tariffs on investment yet, but we've seen a lot on commerce and cross-border business relations between countries. How do you think this is going to impact investment regulations in the US and also worldwide? Do you think there are going to be some sort of any restrictions happening soon?
My feeling, kind of going off of what Ehab was saying, and I'm curious for his views too, is that I think it's, in a way, it's going to get a bit easier. I think part of the administration's priority is getting more investment in from partner countries. And so if you look at something like CFIUS, it's less of an issue for investment funds because investors are typically passive, and so it doesn't present the same sort of CFIUS risk that a more active investment would. So I don't know that we're necessarily going to start seeing difficulties in terms of being able to bring investors in. In fact, I think it might go the other way. I think also, speaking sort of more from a general administrative perspective, I think that we're going to be seeing somewhat less, I don't want to say less regulation of fund managers, but in the last administration, there was a bit more of a push to impose restrictions on fund managers in the US, impose obligations on fund managers in the US that was making it a bit tougher for newer managers to really break in, and is making it a more expensive environment. I do think we're going to see some pullback there, but again, it's a bit difficult to predict. But Ehab, I'm curious for your thoughts on this as well.
I think I agree with Kate. Thank you very much, Kamal, for the question. I agree with Kate. And as you know, we divide the investments into types: the outbound investments and the inbound investments to the US. I agree with you. There will be a lot of challenges for the outbound investments and so on. But for the inbound investment, this administration is very keen to investments coming from any friendly state. Of course, as you know, they have a very strict position in terms of China, and they are very keen to put all the needed precautionary measures to make sure that the technology is not being transferred to a non-friendly state, including, of course, China. And therefore, that is maybe the only challenge that the investors coming from our countries here in the GCC will face as they go to the US, because they have open arms waiting for them with all the facilitation of the regulations. There is talking about facilitating CFIUS. There are other instruments that are going to be easing as per the US investment policy that the president has issued a few days ago. But the challenge will be the connection between these investors and the other jurisdictions that the current administration will consider non-friendly. And I think they have enough wisdom in the manner that they structure their investments to allow them to enter comfortably the US market without exposing themselves to a threat of having this kind of relationship with other countries like China and so on.
We have a question in the comment section from Sara asking if you have any thoughts on investment trends in the education sector.
Thank you for the question. You know, I've been thinking about this when I saw it pop up in the chat. In the fund space, I haven't seen a ton in terms of education investment, I'll be honest. And I haven't seen much in terms of trends moving in that direction. You know, more broadly, I think, you know, I've seen some sensitivity from government institutions about investing in that sector, you know, just due to some of the difficulties that can come along with it and, you know, potentially some of the bad PR along the lines of what you're seeing about private equity investments in healthcare in the US right now. So I would imagine that this is a sector where there may be some similar sensitivity, but I don't know that I've seen anything in particular, you know, in terms of focus on education or any increased focus there, unfortunately. Ehab, I don't know if you take a different view.
Yeah, thank you very much for the question, Sarah, and it's a big question. Again, if we are speaking about opportunities of investment from the US side brought to the Gulf, this is going very well, as you know. There are many profound US and British universities that has opened and is going to open or expanding their operations in the GCC countries. And the room for growth there is amazing, especially as you know, like for instance, the Kingdom of Saudi Arabia, 1/3 of the population are expats, and they want to have international education for their kids and their families. And therefore, you have the initiatives in Abu Dhabi by NYU, you have the Weill Cornell, Carnegie Mellon, Georgetown in Qatar, and so on and so forth. And in terms of investment in schooling system, it is also expanding, and the room for growth there is unbelievable. You have heard about all the international schools brands that are opening in all the GCC countries, and still the demand is higher than the supply that they have. But if you see the other way around in terms of investing from the GCC in US education in the larger extent possible, it will be mainly in technology and in startups that is focusing on facilitating and optimizing of education. That is the investments that we have seen recently, not mega projects, but if there will be investment in education, it will be mainly into these startups that is focusing on improving the education process or converting the education process to a more efficient, streamlined process.
Yeah. And on Bahrain side, we have the American University of Bahrain, as well as DePaul University. There's great U.S. education present in Bahrain, for those of you who don't know. Before I get to Kamal and Alex, I did receive a question from Christian saying, how relevant is the supply chain due diligence law under the new U.S. administration? Also, I would like to hear more about what industries in the Middle East and North Africa do U.S. investors want to invest in?
Kate, do you want to start or?
I was going to say, you know, to speak about the point where, you know, what are we seeing U.S. investors being interested in Africa and the Middle East? I think technology is a big one, and I think tourism is another very big one. So those are the two that jump to mind for me as investment interest areas for U.S. investors. You know, Ehab, your thoughts?
Yeah. Well, yeah, I think I agree with Kate. These are areas that we have seen And we have seen also asset managers from the US investing in the region, because as you know, there is like now some sort of requirement from the sovereigns when they deploy capital with the asset manager to incorporate and help supporting the national economy as well. And therefore, we have seen many of the profound asset managers opening platforms in the GCC cities with different, of course, forms and shapes, but they are all about bringing talents, bringing opportunities, enhancing and improving the national economy. And we have seen also an increasing interest of US healthcare and life science businesses to do activities and do joint investments with the relevant entities and the stakeholders in the GCC. Because as you know, healthcare is also a very growing sector and demanded sector because of the welfare of the GCC economies and societies, and therefore the ambitious to have a sophisticated healthcare system and a sophisticated life science environment is something that is very attractive in the region, and the US investors are aware of this. And we have seen a lot of flow from the US to the Middle East in that regard as well.
And just to key off of something that Ehab said, because I do think it's a really important point, is that I am seeing more interest from fund managers in establishing offices and establishing funds in the DIFC and the ADGM particularly. They've really set themselves up as business-friendly environments with experienced regulators. And one of the great advantages is that as there is so much capital in the Middle East, marketing rules can make it difficult to access. Once you get outside of the big sovereign wealth funds, you're really looking at reverse solicitation. But with the passporting regime in place, it does make it easier to market your fund if it's based in DIFC or ADGM. And so that's another advantage that, in addition to, as Ehab said, just the location and, support from a lot of the sovereign wealth funds, it also potentially opens up getting more capital in from the Middle East for global investing.
Alex, did you want to ask a question?
Yes, thank you very much. Ehab, good to see you again. And Katherine, thank you very much. Very informative session. I'm curious if you guys can talk a little bit about about Trump's push on closing the loophole, the carried interest, raising it from 20% to additional 37%, and how this is going to affect the GP stake surge, and how do you also see the outbound versus inbound investments on that front?
That's a good question. And the truth is, I'm just not sure yet. This carried interest thing has been on the table for such a long time that in truth, I haven't had a lot of my managers come to me freaking out about it yet. Most of the time, what managers have been doing to address this is that built in flexibility in the documents. And this is me pretending to be a tax lawyer, which is by no means a good idea. But just to say, how are managers dealing with this is that it's becoming very, very common now for them to build flexibility into the documents to try and restructure how they make their own investments to preserve as much tax flexibility as possible if there were to be a change in the carried interest structure. So I think it's something that managers have been facing down for some time. And, they've kind of developed ways of dealing with it. And at the moment, I think everybody's just kind of watching and waiting.
I do have some more comments or questions on the comments section. One coming from Mark Fahmi. What specific value propositions do U.S. asset managers offer that differentiate them from European or Asian counterparts in Bahrain / the GCC at large?
I think from a funds perspective, it's really market access. I think it's you do best when your managers have feet on the ground. And as Ehab said, the US is still a huge market. It's a hugely attractive market, particularly in the technology space. And so I think that that's a large part of why we're seeing this rush to VC fund managers in the US is because they do have this access to this technology startups here that, I think is a real advantage. In terms of like specific fund terms, I don't know that there is much difference, to be honest, to be 100% honest with you. Actually, US fund managers do tend to take, they do tend to have slightly more GP favorable terms than a lot of other managers. And so it actually is a bit of the opposite. There's a reason we call it the American style waterfall that advantages GPs versus the European style waterfall that is more advantageous for investors. So I think, really it's market access.
Yeah, and I will add only one small point in addition to what Kate has said. I agree with her in all of that. Is the talents. We have to admit that the asset managers in the US have some of the best talents in the world, and as you know, in relation to fund investments and all other investments, you want to make sure that you have the best talents looking at your investments, analyzing them, choosing them, managing them, exiting them, and so on and so forth. And like the ability to these asset managers to attract some of the best talents in the world is crucial for the success and the returns that they have achieved, and it is shown by their track record. So this really puts the US asset manager in a great position compared to the rest of the asset managers.
I received another question from Huda asking, my question is regarding the interest in the investment types. Is it mainly on real estate and where?
Look, I think Huda is sorry, what was the name then? What is the name of the question, Michael?
Do you want me to repeat the question?
I heard it. So thank you very much. I was just going to thank her for the question. Again, if we are talking about investment coming from the US and real estate, it will remain the case. We Arabs, we love real estate. Although there is some kind of concentration of the positions of some sovereigns and families, but having your asset in front of you, tangible, you can see it, you can look at it, you can go and visit it, is something that still existing in the mindset of the investors from the GCC. And as you know, and as you have seen, and as you notice from all the sovereigns and the families and the large hospitality groups in the region, they are always focusing on trophy assets. And just like a small walk in Mayfair or in Santa Monica or here in New York in the Fifth Avenue, you will identify all the mega real estate trophy assets that are there. So I think, of course, diversifying the exposure into different types of investments is on top of the priority of any risk appetite and the investment philosophy of any sovereigns. They will be, of course, looking at the AI and technology, and we have said they will be looking at the infrastructure, at technology, but real estate will remain a factor that will be always considered if there is something attractive and the trophy.
I think too, as I understand it, because it's been a difficult market in the last few years, there is an advantage for, investors that have a lot of capital because there's simply less competition. So, I'm still seeing interest in real estate, particularly from very capital-rich investors in the Middle East, because there's less competition for good deals. And they take a very, they're willing to take a long-term view. They're not looking to churn things in a year or two. And I think that that's an advantage as well.
I have another question from Kamal saying, how does the Corporate Transparency Act, CTA, affect foreign investment? Could its heightened scrutiny discourage foreign investors?
I think on the fund side, it's not likely to have an impact. And that's one of the advantages that funds have, including funds of one, looking at it from a perspective of somebody else is controlling the vehicle, so there's less disclosure. The disclosure under the Corporate Transparency Act is not public disclosure. It really only goes to FinCEN. So I have not heard a lot of worry or concern, but that could also be because it's popped in and out of effect like 5 or 6 times over the last 2 months. So I think there's a certain amount of, uncertainty about where it's going to land, but I haven't heard tremendous concerns about it yet. Not to say there won't be any, but on the fund side, considerably less so. Ehab, I don't know if you're hearing something different on the directs.
Yeah, just to add, remember, to be honest, we have to admit that the US regulatory side was a little bit behind the European and the UK, specifically in that regard. Like all the sovereigns and all the family offices and investors from the Middle East are very familiar with the regulatory disclosure that is required for their SPVs and LLCs and so on and so forth. Of course, here we're talking about the non-fund type of investments that they will have in all forms and shapes. And therefore, the intervention by the regulatory authorities in the US to require such an amount of very reasonable set of disclosures, I don't think it will create a burden or change really an investment decision to be made by an investment committee. It has added some work and some anxiety about the existing number of LLCs that has been around in the US market for so long time. But I think now, from what I have heard from our clients, they are now all set. They have prepared themselves for filings and disclosures as they go, and they are just following carefully the developments in terms of the judicial challenges and the regulatory requirements and so on and so forth. But they will be able to meet the requirements of disclosures, and for the future investments, it will be an additional boxes that any investor who is going to enter the US market have to tick as they are using SPVs or other forms of corporate structuring.
I promise I'll get to you, David. We have our last question in the comment section from Hazem asking, what is the impact of the new Investment Act on already existing investments?
This is not one that I have much on because, on the fund side, we're always kind of one step away from the actual investment process. So to be honest, at the moment, I haven't seen much impact yet. Ehab, I don't know if you have a different view.
Yeah, agreed. I just don't want to be repeating myself, but as I have said, what I have heard personally from the president and what we have seen physically from all the actions of his administration in terms of policy documents and announcements from the leadership in his government and in his administration, we don't think that there will be any legislative intervention to hinder or undermine a foreign investment coming from, and I'm very specific on that, the GCC countries, because they are on the trusted side of this administration.
David, the floor is all yours.
Thanks all for the really informative discussion. I had a question from the startup point of view regarding the trend that Ehab mentioned of GCC asset managers making investments into technology startups which enhance the local economy, and particularly in this trend of having the startup establish a local footprint for the business, for example, in R&D or manufacturing. I'm curious, two things. One, has this feature now become a requirement for GCC managers making direct investments into US startups that have some hardware or physical goods aspect to what they do, for example, in aerospace or mobility? And then related to that, how will this trend or this requirement interact with the US CFIUS constraints over the next 4 years for US companies that are building technology relevant to the US national security? I'm wondering, will these startups need to take their tech through a U.S. export process before receiving GCC investment, just to verify that it can be exported in the first place? Thanks.
I'll start here, and I'm sure Kate will have views on that as well. Let me be specific about that, David. So I'll make sure that I have got your question right. We have seen investors from the Middle East, being investment banks, being family offices, being sovereign funds, investing in technology and AI in the US. Being startups, being even like large public companies, being private companies in all forms and shapes. And like you have seen the recent announcements and the recent news in this regard. Some of them building the connection with the targeted companies, they require by way or another, sometimes by like the relationship and by the capital commitment that they give to the company to convince the company to start building their business back in the region and contribute to the capability buildings and also to the national economy and to the ecosystem and so on and so forth. And to be honest, some of them, like after consideration, found a value in doing this when they return back. And I like very much your perspective about the fact that in case they do something that is related to technology that the US government is keen not to share with other non-friendly government and so on, what kind of regulatory disclosures or regulatory cautious measures that they have to take. But I don't think that we are yet in that stage. I haven't seen yet a great development in terms of a US technology entity which has relocated or opened a branch or subsidiary in the GCC and starting producing technology that is ready to be exported. But of course, this is a very good remark that should be considered. And we have to understand that whilst the US administration is ready, as they have said, to facilitate and to ease the CFIUS process for the friendly investors from the trusted parties, they are very, of course, careful not to lose the technology secrets to other non-friendly economies and states. And I'm sure that these businesses will have to discuss this with my amazing CFIUS colleagues who are, of course, much better than us into advising on the precautions that they have to take in case they are going to produce technology outside the US.
I think too, I agree with everything that Ehab said. And I think too, from a funds perspective, it can be a useful way for investors to be introduced to, potential technology companies. And, the Middle East is a great consumer market. So for things that are less sensitive, it can actually be a very symbiotic relationship, where there is a potential massive market for a particular technology in the Middle East or the GCC. But I agree with Ehab that, as the technology gets more sensitive, we probably are going to start seeing, we need to consider very carefully what kind of export controls there might be around it. But I agree. I think we're not quite there yet. I think everybody sort of sees the potential, but I think it's still pretty early.
Thank you so much. I have another question from Ahmed asking, do you see any change in investment trends from the Middle East to Canada versus the Middle East to the US?
The truth of the matter is I'm not sure. From my perspective, I see a lot of funds that are established in Canada, but not as many that sort of focus on investment specifically in Canada. What I will say is that even in the VC space, I'm seeing more interest in investors that used to be traditionally US focused, starting to take a bit more of a global view. So I do think that there's sort of expansion from managers that used to be strictly US into diversifying into other geographies. But that's really, I suppose, the area where I'm seeing the trend. And I wouldn't say it's necessarily specific to Canada. I think a lot of times managers can get away with saying we invest in the US or Canada and then having a separate bucket for Europe. So sometimes it's treated very similarly to the US in terms of diversification. Other times it's its own market. So there's a lot of variability there. And I'm sorry I can't be more specific, but I haven't seen a lot that's been specifically focused on Canada.
Yeah, thank you, Ahmed. I will add to Kate that this is your job. Ahmed is an amazing talent in our Canada office, and this is your job now, Ahmed, to help us preparing the same presentation about Canada, Middle East investments in Canada. The thing that I can share with you is always remember for sovereigns, these are very long-term investors. They are investing for the benefit of their future generation. And therefore, one important element, and I had the honor to be a member in the investment committee for one of them for so many years, one critical component in all of their investment strategies and the risk appetite and so on is geographical diversification. So there will be for sure interest in important jurisdiction like Canada. Of course, if Canada becomes the 51 state, this would be a different thing because it will be a US investment. But like, of course, this is a joke. But like, for sure, there is investments that we have seen coming from the Middle East to Canada, and the Canadian government, to be honest, being very sophisticated and very thorough. I have spoken to many of their regulatory authorities in different states of Canada, and they are really eager to opening relationships and bridges between them and the Middle East. So I think with all the attractiveness that Canada has, I'm sure there will be lots of investments going there. But as we all know, like again, it's all about the gross that the investors are looking at. If they look at the return, it will be the US. If they will look at the huge market, it will be the US. But in the same time, no investment committee will allow to concentrate all the investments in the US, and therefore Canada as a stable economy, very large resources, amazing rule of law, amazing government process will have its share in this kind of diversifying portfolio.
I haven't received any more questions, but if anyone is curious to know about anything, please feel free to share your questions. And of course, if you would like to connect with any of us, be it AmCham Bahrain or Dr. Ehab, Katherine, we're just an email away.
Dana, like if I would like really on behalf of Kate and myself and the entire team of DLA to thank you and to thank the AmCham in Bahrain for the amazing support and the collaboration and the contributions that you are making to the ecosystem in the business environment in Bahrain and the entire GCC. And we look forward to cooperate with you and with the US Chamber of Commerce, of course, and Liz and the team, and all our friends and colleagues and connections here, into making sure that we are helping creating the necessary bridges between these important parts of the world, being the GCC and the US. Thank you very much.
Absolutely. I want to thank you and Katherine and the entire DLA Piper team for taking time out of your day to provide this informative session for people around the world. I'm really happy with the turnout of this event. And like you said, AmCham Bahrain is all about empowering the business ecosystem, and we will continue to do so. And we very much look forward to hearing more about Select USA that is happening in May, and hopefully connecting you with potential Bahraini entrepreneurs on their way to Select USA, the US, looking to start into the US market. And yeah, thank you so much.
Thank you for having us. Thank you very much.
Of course. And this is one of many amazing sessions we'll have, inshallah. All right. Thank you so much for everyone. I hope you have a lovely day ahead.
Thank you. Bye, everyone.
Bye-bye.
Thank you. Bye-bye.